Welcome to Stock Talk with Nico Criticos. Today we're going to be going over CuriosityStream and their recent financial report for Q2 of 2021. This is a stock I've owned for a couple of months now. I own 90 shares at an average cost of $11.76 per share. And my main thing with this stock is just that streaming is getting really popular, and I see it getting more popular in the future. I don't think it's going away. And CuriosityStream is the leading player for documentaries and factual type of content. So they do, science, they do history, they do anything that's to do with factual documentary. So this company is not profitable at the moment, and that is the main problem I have with this report, is that they actually reported a bigger, nearly double the amount of money loss this quarter than they did in the same quarter last year. However, we're going to look into their financials a little bit closer, and we're going to see that the main reason that is because of the investments they're making and their acquisitions, their marketing, and pretty much it costs a lot of money when you're a startup and you're growing. So let's go through this now. Second quarter 2021 revenue, $15 million, up over 27% year over year, which is fantastic, and up 55% compared to the last quarter. Then we have paying subscribers across all their platforms grew to approximately 20 million at the end of the second quarter, which is fantastic. And the other big news here is that they announced a partnership with Spiegel TV, which will accelerate their international expansion, because Spiegel TV is the leading factual streamer player in Germany. So that's great for them expanding throughout the rest of the world. And if we go through this, we can see that subscribers grew 56% year over year, and revenue was up big. However, profits were down. So let's see, we have paying subscribers of 20 million, which is up over 40% year over year, and a gross margin increase to 63% compared to last year of 61%. Also fantastic metric there. Now here's the problem though. A net loss of $8.3 million this quarter compared to a net loss of $4.3 million last year. So there's a problem there. EBITDA of negative 10.9 million compared to negative 4.3 million in the same quarter last year. So that's a problem there. However, what we're going to do now, first, let's look at their financial outlook for the rest of the year. So CuriosityStream expects to do revenue of $71 million this year, which is going to be an 80% year over year growth. That's incredible. So this company is growing super fast. Then if we look at, here's them announcing they expand their global footprint with Spiegel TV, which is a leading factual content producer and distributor in Germany. So that's great. They're expanding. Now, here's the interesting thing. So even for 2022, next year, Wall Street has them losing 31 cents per share. So they're still not expected to be profitable for a couple of years now. But look at their revenue numbers. For 2021, they are expected to grow 79% revenue and 73% revenue growth for 2022. So this company is expected to grow huge. And the reason I feel pretty safe with this company is because they have a great balance sheet. If we look over here, we can see that, let's go up here. We can see they have total current assets of 120 million and total current liabilities of only 38 million. So that's a great ratio. Total assets, 231 million, and total liabilities, 62 million. Fantastic numbers. Now we're going to look at their statement of cash flows, or whatever you want to call it, operations. And this is, if we look year over year, for this quarter, they did 15 million compared to 12 million last year. And let's see, now here's the interesting thing here is where the money is going. So as we can see there, their net income the loss nearly doubled. So that's not good, but there's good reason for that. And that is because if we go through, we can see. So here we have additions to content assets. Okay, the loss nearly doubled there. So that means they're investing into that. Then there's some other things. We have net cash used in operating activities. That's where a lot of money is going. But then if we also look at where is it? Here, business acquisition. So this same quarter last year, they had zero money go to this, but this quarter they had $4 million go to an acquisition. So they've been acquiring a lot and doing lots of different partnerships and stuff, but I'm thinking this is their acquisition of One Day University, which is a company they own that has over 500 college lectures on their platform. So that's a great thing to add to their arsenal right there, is the college lectures. Then we have purchase. Look at this. Here's where the money's going. Purchases of investments. At this quarter last year, it was 12 million. This quarter was 141 million. So huge increase there. And then net cash used. Last year, they made 31 million. This quarter, they lost 128 million. So that doesn't work. As much as I don't like seeing that, I'm not a big fan of unprofitable companies. And that's why I'm not making this position too big, just because it is a little bit of a risk, although I'm very bullish on them. But their balance sheet is in a good position, and they're growing super fast. And so that's why I'm okay with the amount of money they're spending, because I see it as a good investment for this company. So this company is reporting huge revenue growth, and hopefully they can try to turn a profit next year, sometime in 2022, but we will see what happens. So that's all for today. Thank you for watching.